John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer. I am a consumer credit expert with 29 years of experience in the consumer credit industry. I have spent time with both FICO, the credit scoring company, and Equifax, which is one of the generally recognized major consumer credit reporting agencies. So a little bit of a newsy vlog today for you, and it's about the kind of direct and indirect impact of COVID-19 on credit. And there are some direct influences of COVID-19 on credit and then some indirect influences of COVID-19 on credit. So we're going to talk about both of them, and we're going to talk about why it's important to you and what you can do about it, if anything. So COVID-19 obviously led to and is still leading to increased unemployment and underemployment. And for those of you who don't know what underemployment means if you're normally making X dollars an hour and that has been reduced, or if you're normally working X hours per week and that has been reduced, or if you are used to making a salary that's up here and now you're making a salary that's down there because you had to change jobs, that's called underemployment. So it's anything other than what your former salary or former earning power may have been. So you may be underemployed because of COVID, or you may be unemployed because of COVID. So what generally happens when the unemployment rate goes up is lenders tend to, it's called the flight to quality. Lenders tend to increase their standards with respect to lending requirements, and that means that they make it harder for applicants to be approved for credit because they increase the requirements that you have to exceed in order to be approved. Card issuers are lowering credit limits. That is not breaking news. That is widely known. If you Google credit card issuers lowering limits, you'll see any number of stories of major credit card companies lowering credit limits. And also card issuers and other types of lenders are increasing their credit score requirements. If we didn't have COVID-19 and therefore we didn't have unemployment increases and we didn't have underemployment increases, then lenders would not be doing that because our unemployment rate was essentially at a historic low prior to COVID-19, and lenders were much more willing to be liberal with their lending standards. But right now we're in the middle of this pandemic and card issuers are lowering limits, and they're lowering limits more so on credit cards that are being underutilized. So they're not necessarily lowering credit limits so much on cards that are your primary card, that are the cards that you use the most often, that have the largest balances. They're really adjusting the limits on credit cards that you're using sparingly or frankly not at all. So it's not uncommon for someone these days to have a card that had a $10,000 limit that is used very sparingly to all of a sudden the card issuer lowers it to $7,500 or $5,000. They're just essentially adjusting the credit limit to be more in line with your usage patterns. Increasing the credit score requirement, essentially what that means is if the lender would normally approve you if you had a FICO or a Vantage score of 620, they may have now increased that to 630. So what it does is it reduces the number of people that would qualify for certain types of accounts because fewer people are going to score higher than 630. And it also, those who are approved, it's a better quality borrower because those people are a lower risk relative to the folks who have the lower credit scores. And that's why it's generally referred to as the flight to quality. So that's kind of the indirect impact to credit caused by COVID-19. Here's a direct one. There is no direct impact on credit scores because the CARES Act, which is the Coronavirus Relief Act that was signed by the president in March of 2020, does not address credit scores at all in the portion of the CARES Act that amends the Fair Credit Reporting Act. So there is no requirements for the credit bureaus to do anything vis-a-vis your credit scores. There's no requirement for FICO or Vantage score to somehow protect your credit score by, kind of systemically. That just simply doesn't exist. And frankly, that would be a horrible idea if that was something that was mandated congressionally or legislatively is to somehow cause your credit score to stay good, even though you may not actually deserve to have a higher score at that point because you may be a higher risk than you normally are. So why are all these things important to you? Here's why. Lower limits mean possibly lower credit scores, because your balances, if you have not reduced your balances at the same rate that your credit limits have been reduced, means that your utilization percentages on those credit cards is going to go up. And that means your credit scores can go down, because credit scores absolutely consider those types of ratios in their metrics. Lower credit limits also obviously mean less spending power. You have less capacity, you have less buying power on your credit cards. And so if you whip a card out of your wallet and you think, hey, this card has a $10,000 limit, that card may not actually have a $10,000 limit any longer. It may be $5,000 or $2,500. And so you've had a significant decrease in the spending power of that card. The increase in the credit score requirements does not necessarily affect everybody. For people who have FICO, Vantage score, 750 plus, that's immaterial to them because their scores are already so good that they would have been approved for whatever they applied for anyways. It's also, to the flip side, someone who's got credit scores in the 500, it's not going to matter for them either because they are already being denied everything they applied for because their credit scores are so bad. What this does is this is really going to impact what I call the marginal applicant more so than anyone else. This is someone who's got credit scores that are really close to the lender's cutoffs. And so let's say hypothetically that a lender has a score cutoff of 620 and you're at 622 or 629. You're a marginal borrower because you're so close to the cutoff. And if your score even just dropped 5 points, 10 points, 20 points, which is not a drastic decrease in credit score, you could have just fallen below a lender's score requirements, which could have led to either a denial of credit or an approval, but with less advantageous terms. That's referred to as an adverse approval. So the marginal applicant is really going to be the consumer who feels this more than anybody else. So, all right, what can I do about it? So now that you know the issue, you know why it's important to you, what can you do about it? Well, credit card issuers can certainly reconsider their decision to lower your credit limit, but they don't have to change their mind. Even if you call them and ask them, they don't have to change their mind. And frankly, if they've done it, then they've generally already made their decision to do so. And it's usually on a card that you're underutilizing anyways. So my advice is, and this is something that I don't generally advise, but in where we are right now in the history of this country with this whole COVID-19 issue, is that you may want to put your credit cards kind of on a revolving door type of strategy where you're using every one of your cards periodically from time to time just to get some usage on that card. And so what that's going to do is it's going to act as an incentive for card issuers to not necessarily choose that card to lower the limit because they are seeing some sort of usage on the card, and usage on a credit card means money for the banks because of the swipe fee, and if you're carrying a balance, obviously you're going to pay interest on that card. From a scoring perspective, certainly you can go out and apply for a new card. If a credit card issuer of yours has lowered your limit and you understand that this may have an adverse impact to your credit score, let's say you lost $5,000 or $10,000 of credit limits. Well, you can replace that by opening a new card or becoming an authorized user on a credit card account that has a credit limit of $5,000 or $10,000. It's essentially a net neutral swap. You lost that amount, but then you gained it back by associating yourself either with a newly opened card or with a pre-existing card as an authorized user. And either of those strategies are perfectly fine. So that's the issue, the kind of the direct and indirect impact of COVID on credit, the why it's so darn important because of the buying power and the potential decrease in credit scores and the potential for it to be harder for you to actually get approved for credit. And then the solution would be to actually put some usage on your underutilized cards so that it's less of an incentive for the issuer to do anything adversely to your account. Thank you very much for watching. Best of luck to you, and I hope you have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.